Kia ora, I'm David Chester with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news that in an act of considerable bravery, the leaders of Poland, Czechia and Slovenia have gone to Kyiv for talks with the Ukrainian leader, even as Russia is shelling the city. Separately, this morning's dairy auction has brought in hesitation, albeit one at the top of the range. Overall prices fell 0.9%, but stayed within touching distance of its record highs. The dominant whole milk powder volumes fell the most, down 2.1%, but skim milk powder rose 1.6%. This time the exchange rate provided little difference to these results, but these were results lower than market expectations, where a further but smallish rise was anticipated. However, this result is no different to commodity prices generally, which made some reversals overnight. Last week, US retail sales gains eased further on a year-on-year basis, but still with an outsized swelling, even if it is on a weak year-ago base. They are eating into those gains now, and it's quite noticeable, but the rises are still well above inflation there. Also easing is producer price pressure. The US PPI not only came in lower than expected, the February growth levels were lower than January. But producer price pressure is still very evident in regional factory surveys. The New York one still records high costs, but it also recorded a sharp decline in overall activity, and this was despite a rise in new orders. They may be finding it tougher now, but these firms are also quite optimistic about the immediate, that's the 6-month ahead, future. In Canada, their housing market is still in full froth mode. Canadian home prices hit a new record high in February as a dearth of properties for sale continued to fuel buyer competition. And China released some February data yesterday, and it was all much more positive than some, including me, were expecting, even if it is benchmarked against a weakish base. Retail sales were up 6.7% year-on-year, when a 3% rise was expected. Back in the US, the Federal Reserve is meeting and widely expected to raise interest rates to lean in against global inflation. But the return to normal they had hoped to see remains elusive as the global security situation goes bad. And the US Treasury 10-year yield opens today at 2.13% and up another 2 basis points from this time yesterday. And the price of gold starts today at $1,929 an ounce, and that's down a very sharp $32 from this time yesterday. And oil prices are again very much lower, down $5 a barrel. In the US, they're now under $95.50 a barrel. The international Brent price is now under $99.50 a barrel. And the Kiwi dollar will open today marginally softer again, now at just over 67.6 US cents. But against the Australian dollar, we're now at 94.1 Australian cents, which is another quarter cent firming since this time yesterday, and our highest in 2 months. Against the euro, we're holding at 61.7 euro cents. And that all means our trade-weighted index starts today at 73.2 and 20 basis points lower. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.